Hello, everyone. This is Wilms, your favorite Forex trainer. I'm going to go over this market structure diagram that you see in front of you in our weekly, in our training today. Um, I do these trainings every week. That's why I said weekly. But yeah, we're going to go over market structure. This is a simplified guide to help you identify the different patterns, the different cycles in the market. So we're going to go ahead and dive into this content. If you're watching this on YouTube, subscribe to the channel, hit the bell button. That way you get notified when I do videos like this. I do this training every Saturday, approximately around 12 o'clock in the afternoon, Eastern Standard Time. And I put it out to you guys so that way you guys could actually view it and take notes and, share it with your friends and things of that nature. I'm gonna keep it simple. That's what typically what I do is I make it very simple. That way you can truly understand how to read the charts. If you don't already have TradingView, go ahead and subscribe to TradingView off my website, metrofxtraders.com. Click on the link that says TradingView, and you'll get access to a chart making tool. That way you can actually mark up your charts and understand what you're actually getting involved in before you actually place a trade. So in market structure, you have to understand market makes higher highs and higher lows. And in this diagram, basically there are different cycles and different patterns that happen within the market that you'll need to identify. Because I have a lot of people saying, this looks like hieroglyphics. I don't understand what I'm seeing. But if you understand these patterns and identify these patterns in the market, you could take advantage of these patterns, whether you're in an uptrend or in a downtrend. So as you can see here, we're in an uptrend. Market's making higher highs, higher lows, higher high, higher low, higher high, higher low, higher high, higher low. And then it starts to change. Excuse me. And then when it changes, it makes lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So this is an uptrend. This is a downtrend. So this is the first thing you need to identify, whatever time frame you're in. This is a daily time frame, and this is BTC USD. So this is Bitcoin. So whatever time frame you're in, you need to identify whether or not you're in an uptrend or in a downtrend. So if you were actually looking at the market over here, you'll notice that the market was actually in a downtrend, and then it started to revert into an uptrend to start to change, right? Now, things you need to look for when things start to change in the market is these patterns, right? When it starts to, when the market comes down, it hits um, demand, right? This is demand, there's a lower part of the market, demand, and this is supply, which is the top. So in demand, okay, some people like to say support and resistance, where the top is called resistance, which is the ceiling, and the bottom is called um, support. So you want to buy on support, sell on resistance. Okay. So, but the market shows you this. This is called a double bottom. So when the market hits this line twice, right, it needs to pull up, okay, and it comes back and retraces back onto the top line, okay, because this is support, this is resistance during the time of the market. Excuse me. And once it retraces back onto resistance, which now turns into support, right? Because always the bottom is always called support, and it'll trend higher, right? So it started trending higher here, and then it started retracing a little bit on the downside, okay? And rule of thumb, always place a trade on an uptrend, never place a trade on a retracement. You want to get in on a retracement, that way you can continue to catch your higher highs, okay? But this is called a bull flag. So whenever you see this type of pattern, you want to etch this in your memory. Every time you see this type of pattern, it's a continuation of an uptrend. Okay, so that's a bull flag. Okay, so you know screenshot this, pause the video, maybe draw it out on in your notebook, and remember these patterns. This is a bull flag. Then you have a bull pennant, okay, when the market is doing one of these numbers. And you'll notice the market has to come back and touch the top and then bounce off to continue the trend. Touched, you know, it'll pull above it, come back, retrace into it, touch this particular line because you're going to want to make your diagrams just the way you see it here. It pulls upward, okay? And this is an ascending wedge where it'll do one of these numbers here, okay? But you'll notice that the now in an ascending wedge was an indication that the market's changing. Now you're seeing a market change, market structure change, okay? Because it's changing down, it's starting to go down, creating a lot of sell activity. People are looking at the market now, look at the selling market, try to capture these, the downward trend, right? By placing their orders downwardly. So you have a descending wedge, okay? And now you have a triple top where it'll bounce up, hit the top of resistance more than once. 1, 2, 3, triple top, and then it then breaks support and then retraces back into, which is now called resistance because it broke support, bounces off resistance and starts to climb lower now. And all of a sudden you start seeing this bear flag. Okay. Now you're not necessarily going to see this in every market or every trend, but you want to look out for these and make a note of it. So when you see a bear flag, you'll understand that a bear flag is a downward continuation. Okay, it's continuing the downward trend. Then you have a bear pennant, same thing. It bounces up and down, comes out of the little arrow you put here, retraces into it, bounces off, and continues its journey. Now, I've taught you guys what inverted head and shoulders are. So when you start seeing the inverted head and shoulders, okay, you'll notice that with an inverted head and shoulders, the market is changing. Okay, it's changing. All right. But there's also it could be a fake out, and you'll notice by looking at the next pattern, which is an inverted cup and handle, because whenever you're looking at an inverted head and shoulders, you don't take the trade within the head or the shoulder. You take the trade after it comes out of, the pattern, comes back and touches, which is now called support, and then trends higher. Okay. But now you see an inverted cup and handle. Okay. Again, once you see this pattern start to develop, you want to prepare to take your trade going lower. Okay, so this is just a tall tale sign that the market is going to continue its trend lower. Okay, so you might think, okay, in this inverted head and shoulders, the market's going up. You could have caught a couple of pips here, but once you start seeing this pattern here, you want to go ahead and prepare to put a sell order right in this general area. Once it reaches back into resistance, okay, then it starts to trend lower. And then you have an expanding wedge, okay, and the expanding wedge, you'll notice that it comes out of the expanded wedge, retraces back into this line right here, and it trends higher. Then you have a cup and handle, okay, which is similar to this cup and handle, but it's upside down, right? And then, so when you see this cup and handle, okay, you want to anticipate the market to go higher. And again, you place your trades on the pullback, not so much within the cup and handle, not so much when it pulls out, and surpasses, at this point it would be resistance. When it comes back and hits this line right here, which is now support, you want to now take a buy trade and ride the wave higher. And lo and behold, head and shoulders. Once you see a head and shoulders, you'll understand that a head and shoulders pattern is a reversal pattern. And all of a sudden, it starts to trend lower. So these are the different patterns that happen within a trading cycle. Okay. And I wanted to put this up here to show you guys a diagram and to help you guys to put, encourage you guys and gals to put this into memory. Because that way, when you're reading the chart and you start to see these patterns develop, you can go ahead and say, okay, I see a head and shoulders pattern developing. Let me wait for it to come out of this so-called support. It changes now into resistance. Okay, because once it goes below support, it is now called resistance, which is the ceiling. Look at this. This now retraces back into resistance, bounces off resistance, and pulls lower for a sell trade. Okay, so there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 different patterns here that I want you guys to write out on a cue card, write it in your notebooks, okay? Put it into memory. That way, when you see these patterns, you know what direction the market's going to go to, and you want to take advantage of whether it's in a uptrend, okay? Because these are all bullish. It's a bullish trend here. When it starts to change, you have a market structure shift, and all of a sudden you have a bearish trend happening here. It's pulling lower. Okay. So as you can see, all of this, if you look at this right here, it's all going sideways. So you have a consolidation over here. Okay. And then you wait for this cup and handle to develop, if it ever develops, for a continuation of this uptrend over here. So that's what I want to share with you guys today. This little structured diagram should help you out. I mean, you could print this out and you can actually, when you're looking at the charts, go into the charts and back test, go to the past and take a look at how you can actually identify these in the market. Okay. So if we were to go into the market now, and let me see, let me pull that up. Let's try to identify some of this stuff in the market. Okay. And see what it says. All right. Pull up the market here. And oh, by the way, thank you so much for being part of the group. We now have 241 members in the group, and I'm excited about that. And also, thank you so much for subscribing to my YouTube channel. I have over 500 subscribers now, and it's growing by leaps and bounds. So thank you so much for viewing the videos. Thank you for giving me a thumbs up. It helps with the algorithm. That way I can get other people excited about what YouTube does. It just shows out the videos to everybody that looks for a certain keyword. And my most popular video on my channel is the Candlestick Bible audiobook. It's got over last time I checked, it was over 20,000 views, and that's exciting in itself. So continue to stay plugged in, stay excited. There'll be more audio video type of videos whereby the actual, there's an audio book, so to speak, and somebody's reading the book. So that way you guys can listen to the book while you're out and about. Okay, so let me just here. Okay, so here's the market. All right, so let's go to GBP, one of my favorite pairs, GBP USD. And let's take a tour together, right? Let's see if we can identify any of the patterns that we saw on that diagram, okay? All right, so we can actually stop right here, and I can actually show you right here a head and shoulders pattern. And that's how quickly, once you start memorizing the diagram, that's how quickly you can identify some of these patterns. I mean, I just pull this up here, and I already identified a head and shoulders pattern, which is an indication that the market's going to go lower. See, what it did was it created the head and shoulders pattern. Okay, and what you do is you put your horizontal line at the bottom of the head and shoulders pattern, and what do you see? You actually see it actually breaking out of this area here. Okay, so in this particular, pattern, what I would wait for is for the retracement to come back, hit this line right here, and then take the sell trade going down. That's what I would wait for. Okay, that's how you actually would place your trade. You don't place your trade down here. You don't place your trade right here. You wait for the retracement of it hitting the now called resistance line, bouncing off resistance. Okay, and you always want to look for a bearish engulfing candle during this area. Okay, and once it shows you a bearish engulfing candle, that's when you actually take the trade. All right, so that's one. Let's see if we can find another. Okay, okay, here's another pattern here. Okay. And what did it do? It showed you a bullish flag, right? Bullish flag, which is this right here, bullish flag. So this is a bullish flag, okay? Bullish flag. It came out, right? Came out, came back and touched this line, bounced off the line, and continued its journey going higher. So that's a bullish flag, okay? Now let's continue our journey and see if we see a double bottom. Okay, this could be considered a double bottom here. Okay, one the bottom, two, okay, so double bottom, one, two, comes back, hits the line, continues journey higher. And kind of made that line crooked. It's a double bottom. What else do we have? Let's see if we can find something else. All right, how about another head and shoulders right here? How about inverted head and shoulders right here? Inverted head and shoulders. Again, once you put your line, you wait for it to pop out of the pattern, pop out of the pattern, which it did right here. This candle popped out, came back, came back, The wick went a little bit past support because it just changed the support. Okay. But it eventually pulled back up right here. Okay. So this is like a quick scalp trade right here because you definitely want to get out quickly if you're scalping because it did pull back, but it did continue its journey higher. So depending on where you put your stop loss, if you had put your stop loss below the right shoulder, you would have still been in the trade. Okay. So that's an inverted head and shoulders. So we're actually doing pretty good. Okay. I'll give you another one here. Okay. This would be considered a breakout trade. Okay. Because it's consolidating. So you just, you're not placing any trades within this consolidation. But you're waiting for it to break out of the box and come back, pull back into the box. Okay, so what it did was here, came out of the box right here with this candle, then pull back with this candle here and trended higher. That's considered a breakout trade. Okay. All right. And that's how you back test the patterns. You go to past history. You can also find them in any time frame. You can find in the 1 minute, 3 minute, 5 minute, 15 minute, 30 minute, 1 hour. It's all here. And all you have to do is put those patterns into memory and try to identify those patterns. That way you could take advantage of the market. Okay. So again, is an inverted head and shoulders. Redraw that. Okay, this is an inverted head and shoulders. It pulled out, tried to come back, right here. So you really have to be in front of the screen here to take advantage of this trade. It didn't come back to hit the support line. So that's inverted head and shoulders. Hopefully you guys are getting value out of this. I actually love going into historical data to identify these patterns. That way I could take advantage of these patterns when I'm in a trade. Okay. All right. All right. So here you go. You have a bullish market right here, which is an uptrend. See, this is an uptrend. You get higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Okay, then you have consolidation, then you have a pullback. It's below your trend line, and now you're looking for sell orders over here. But as you can see, it's now consolidating right here. Okay, breaks out of the box here, consolidates again right here, breaks out of the box right here. Okay, and then you see an inverted head and shoulders right here that starts trending higher to continue the trend right there. All right. So yeah, well, that's what I want to share with you guys today. So definitely use that diagram. I'll bring it back onto the screen. Put all this information to memory. Look for the inverted cup and handle, look for the cup and handle, look for the expanding wedge. It's all in a particular trend, whether you find it in an uptrend or the downtrend. This is what you need to study. Okay. Just like a doctor, when he takes x-rays of your bones, he knows what he's looking for. So you'll be just like a doctor. This is going to be your x-ray for the for the market. That way, when this stuff starts to happen, you start to see changes, you start to see patterns, you could take advantage of either an uptrend or a downtrend. So hopefully you guys found value in this. I appreciate you guys coming on. Um, Stay tuned for next week training. I do them once a week, and throughout the week, I also do ICT Silver Bullet strategy review. Take a look at the market during the week to see if we can identify the ICT bullet strategy between 10 a.m. and 11 a.m. And then again at 3 p.m. to 4 p.m. New York trading time frame, New York session. And then it happens again during the London session from 3 a.m. to 4 a.m. We try to, identify whether or not the ICT bullet strategy can be can be implemented during that time frame. So with that being said, everybody, thanks so much for watching. You guys be great. Happy trading. And let's have a successful week next week. Thanks for watching. Bye bye now.